Now, welcome to part 9 of my series of called So You Think You're Doing Gann Angles, and in it I've tried to show you that basically all the so-called experts out there who talk about angles can talk really a complete and utter load of rubbish and have absolutely no idea what they're talking about. And of course, if you put random lines on charts, all you're going to do is get random rubbish. And if you watch the whole series, part 1, which I started in 2013, October, and you watch them all the way up to the date, you'll see that I predicted the future. Now, I can't change the date when these videos were published on YouTube, so as far as I know, I can't. So you'll see that what I've said has actually come true into the future, a long way into the future. Now, the last time we looked at this in part 8, I think was in February of 2015. So what I'm going to do is show you some more of my signals. Now, I'm in the middle of redoing the website at the moment, and if you want to look at what I've done so far, then if you put in www.gann.co.uk/Zenith Analytic, then you'll get this bit. But what I want to show you, there's some interesting things here that I think you really need to understand if you want to become a successful trader. But if we scroll down a bit, what I want to go to is this bit here, the intraday trading myth that Gann has surrounding him. Now, just because Gann said something back in the when he was about 32 in a Ticker Tape magazine article, which you can find anywhere on the internet, so I'll let you read that yourself, it implies that the guy was making loads and loads of trades and getting 98% of his trades correct. Unfortunately, I just don't think it's true. In fact, I think it's a lie, because the technology at the time just wasn't available to actually do that. At the time, a contract had to be written up. It's not like today where you've got computers all over the place. You know, back in the 1920s, you know, there was no technology. Everything was done by hand. Also, all charts were done by hand. So to actually trade off his charts, which is what he says you have to do what he said is just, you know, just don't think it's possible. So I'll just read you a little bit of this bit here about intraday trading. So why do you want to start trading? Obviously to make money. In the news you will hear of whiz kids making millions while still at school, large investment banks with dedicated intraday trading departments making huge fortunes for their clients. How do they do it? The answer is it's simple. They don't. Okay? But it's extremely important that you believe they do. Why? Because they make money from you trading. The more you trade, the more commission you pay. Okay, so what proof do I have? Well, it doesn't take a genius to work it out. Quite simply, why are there stockbrokers, investment bankers, fund managers, etc., if they're such great traders? Okay, so I'll let you go to the website and read it. Like I said, I've not checked the spelling and everything, so but basically, when Gann was trading, this is the height of technology. It's called a ticker tape machine, and you can see they're all sitting there waiting for their particular share price to come through from the stock exchange. Okay, now say you bought IBM. Well, IBM might be at the beginning of this ticker here, but it might not come through on the ticker again for an hour. Okay, because of the technology at the time. So, you know, it just isn't possible, but I'll let you come to your own conclusions and you can read all the bits that I put in here. Okay. And in fact, Gann later on in life, basically when he wrote How to Make Profits in Commodities, when he was a lot older and a lot wiser, he basically tells you how to become a successful trader. You make a greater success. Oh yeah, this is from How to Make Profits in Commodities by W.D. Gann. You make a greater success when you sit at home or in your office quietly following your charts and trade on definite indications. I am not guessing or giving you wild theories. I have gone through the mills. I have had every ticker, real-time price feed, that's the same thing, in my office for years. I thought I could not get along without them. I lost plenty of money. So this guy who's meant to be 98% correct day trading has just told you in his own words, in his own book, that he's lost plenty of money by having them in the office and getting him wrong because the ticker showed some minor trend and threw me off the main trend, which I'd already figured. I made a greater success when I took all the tickers out of my, or should I say all the real-time price charts out of my office, and I've not had a ticker in my office for the past 10 years. Okay? That is the secret to making money. The secret to making money is to wait for good opportunities. In fact, the secret to making money is making very small losses when you're wrong and making very big profits when you're right. And you all sit there and go, yes, I agree with that completely, and then do completely the opposite. Okay? You can only make a small loss with close stop losses. Okay, now if you enter the markets at random times and you've got a close stop loss, what will happen is you'll just keep randomly getting stop lossed out. Okay, and that's why people stop using stop losses eventually, because they see the market go their way, then they get stop lossed out, and then they think, well, if I wouldn't have used my stop loss, I wouldn't have lost the money. And then when they stop using stop losses, that's basically when they lose all the money. Okay, but just as important as making very small losses when you're wrong, you've got to make big profits when you're right, because you will get trades wrong, and big profits cut out a lot of small losses. Okay, now the problem is you can only make a big profit from a big movement. Okay, so I see trades all the time, but it doesn't necessarily mean that I'm going to trade them all the time, because to make a big profit you've got to use stop loss rules that are going to keep you in good trades, because markets don't just go down if you're short or up if you're long. Okay, they go up and down, and so the stop loss rules that I teach in the video course are there to basically keep you in trades for as long as possible. Okay, now if you don't make those big profits, you're wasting your time, because what you'll find is your losses will be bigger. If you day trade, of course, will be slightly bigger than your profits, and you'll just basically end up getting nowhere if you're very good. And the problem is that most people aren't very good, and they always think they know better, and it's only with experience that they realise that, and they run out of money, of course, that what they were doing was daft. So like I said, the only people who make money day trading, and I don't care who it is, okay, the only people who make money day trading are the banks, because they get commission from you trading, and the commodity brokers, etc. Don't do it. Okay, if you want to gamble, go and do it on the horses or something, because you've got a better chance. Okay, but if you want to trade on the speculative markets, then you need to learn that there is a time to stay out of the market and there is a time to be in the market. And in fact, that's exactly what Gann is telling you here. Okay, he basically figured mathematically points where he thinks the market's going to turn, and then he would wait for those opportunities to come along. And if he has to wait a week, he'd wait a week. If you have to wait 2 weeks, he'd wait 2 weeks. If you had to wait a month, he'd wait a month. Okay, but you have to wait. Okay, so that was me blabbering on. Now, the last time we looked at it in part 8, the chart looked like this. So what I'm going to do here is I'm going to put in what I said at the very end of part 8 about what I thought was going to happen next. Now my next level, actually, I've got a feeling it's going to go back up to that angle again and work again. Now that's what I said in the previous video on YouTube, so you think you're doing Gann angles part 8 right at the very end, and what I said was that I thought it was going to go back up to this angle for a second time. Now I've actually explained why I thought that might happen in a previous video. In fact, I did it in So You Think You're Doing Gann Angles part 6. So let's look at that and see what I said. And if you, so let's just show you the video. It's this one here. So You Think You're Doing Gann Angles part 6, and I published that on YouTube on the 31st of January 2014, so well over a year ago. And I played a video from the basic angle rules that clients get access to, and I gave it this title: Common Mistakes Made Drawing Gann Angles. Yeah, but there are many more, and there are definitely many more. Now if you move to the timeline to looks like 9 minutes 25, then basically you can play the whole bit about, because there's some of the rules that are stuck in there, but what I'm going to do now is I'm going to move it to the bit about drawing angles from highs to get future highs, and this is what I said. In this particular case, we've drawn an angle from a high going upwards, which I would never do. But if you have, it might look something like that, and you might be tempted to think that that's a good reason to short the market. But again, what usually happens, I mean, sometimes they work, but what usually tends to happen is the market actually goes higher. So it comes down and then it goes back up again, and then it might go. So that's what basically I said in a video that I produced actually in about 2003, so a very, very long time ago. Now, I can't say when the market's going to get to a level. Markets don't work with cycles. Things don't go to a certain date and that's where the market will turn. Things can be stretched out, they can be compressed, but things are attracted to levels. It's basically the theory behind chaos theory. So, you know, nothing is set in stone. Okay, things can expand, contract. It might take a week to get there. It might take 2 weeks. Okay, so I learned a long time ago to not to do cycles, etc., and just wait for things to happen, because of course it might not happen. Okay, but I did say that I said that I thought it might go back up to that level, and so and I just showed you the rule that I explained a long time ago. Now that doesn't mean the market can't come down and all the rest of it, but I did think it was going to go back up again, and what happened is the market came down, it went back up again, and eventually we got to here, and at this stage here I did a signal for clients explaining what I thought was going to happen next. So I'll play that next. Now there's the S&P 500 future, and as discussed in the training video the 23rd of the 3rd 2015, I'm looking for a possible short here, but it might not quite get there, it might only be here. If I'm going to pick up my chart, it'll be MS703 by GS. So that's what I said, and this is what it looked like, and it looked like it was going to get there in the next few days. But another thing I've learned is that things never get there the way you expect, and what happened was the market came down. Okay, now there's a great temptation to go, oh, I've missed it, I've got to get in. Okay, but as you can see, what happened was the market traded sideways, and one of the reasons I did this video is because it's incredibly, unbelievably important you know when to stay out the market, because these kind of movements here, if you're a day trader, is the kind of things that completely wipe you out and you run out of money very quickly. Because I'll repeat what I said at the very beginning, to be a successful trader you've got to take small losses when you're wrong, which most people who use stop losses can do, but you've got to make big profits. The problem is you can only make big profits from big movements, and if you're not going to get a big movement, then you're not going to make any money. Because there's another part to trading, which is you need to know when to get out, and as I mentioned at the beginning, I have rules that are designed to keep me in for as long as possible. So for example, let's just say that I bought here and I had a stop loss below there and it went my way. Well, if I use my stop loss rules, then I would have been stop lossed out. Yeah, I would have been stopped out there. Okay, so I would have stayed in that movement all the way up. Okay, so that's another part of trading. So you need to know when to stay out of markets when they're going up and down and all over the place. And you can see the market's going up, and then in one day it all disappears. Okay, you've got to get big movements, you've got to find major turning points and not little piddly little ones, because as I said before. Now the next video I gave was here, which was on the 21st of April 2015, and it was really just reiterating the level that I was watching, but it had changed slightly due to the amount of time that it had actually taken, because obviously angles are travelling in time and price, they're getting higher over time. So I'll put that video in here. Now there's the S&P, I'm just changing it for the change I made in the training videos on the 21st of the 4th 2015 from the signal I gave on the 31st of the 3rd 2015. I said it in the one on the 31st of March, I said that it might stop here at 4.165, but I did the video right back here, and obviously the angle's rising as time goes by. So in the last video I did, as I said, on the 21st of the 4th, I changed the level to here. So just make it clear that's the level that I'm actually watching at the moment. If you want to pick up my chart, it's MS703 by GS. Okay, I just got the date slightly wrong. I actually said it a few days later. I said it when it was about here. So basically, this was the level I was looking to short at. The market's going up, so it's looking quite strong, but incredibly difficult to make money out of. Each one of those represents a day. If you're watching intraday prices, a nightmare to trade. So let's see what happens. The market comes down, hasn't got there yet. You need to know to stay out of the market. Still hasn't got there. The market's gone down. Still not interested in trading it. You can see it goes down for 2 days, then in 1 day all your money disappears, goes down for a couple of days, then goes shooting back up again. You need to know when to stay out of the market. It will wipe you out. Okay. The market has now made 1, 2, 3 tops, and this is what Gann called a 4th attempt. So you would expect it to break through. And that doesn't mean it's a buy, because it depends how long it's going to last. But the market then gets there. We've now reached the angle. We've got to the level that I mentioned in the focus signal I gave to clients. Let's see what happens. The market comes down again, and then we have a big fall. Then we have an inside day, then we have another inside day, and then the market comes down. We go back up again, the market goes back down again. Okay, so you can see it was basically the top of the market. Remember, that angle was drawn back in 2013. Quite amazing if you think about it. It's also done exactly what I said in the video, so you think you're doing Gann angles part 6, where I said that when you rise to a rising angle, the market tends to go back up to it. You can see an example here. Yeah, it tops out, comes down, goes back up and goes higher. You can see it here. Market goes up, comes down. There is an angle, by the way. If you watch one of the previous videos I show you, there's a number between those. It goes down, then goes back up and then comes back down again. But it only tends to do it twice. Okay, so I wouldn't really expect it to happen a 3rd time. Okay. Now I've gone a little bit too far forward, so I've gone back. Now the next signal I gave was on the 2nd of June 2015. So what we'll do is we'll play that here. Now it's the S&P. Let's go with the training video of the 2nd of June 2015. And as discussed in there, I'm looking for possible shorts on getting back up to this level here and the angle, and also watching for buys on these rising angles and reaching one of these important percentages at the same time. Especially interested don't buy if it hits the trend line, the 36.1, and rallies off that one up to that level, because it probably won't last. If you want to pick up my chart, it'll be MS703 by GS, and in that video I also did the Dow, and that will be KJ91 by GS. So that was a signal that I did on the 2nd of June, and if you look at that previous frame, you'll see that I had some angles on the chart. The major ones are the one into the darker lines. 64 gave you this low. Half of that is 32 for the future. 48 works here. I would never trade it here because it's an obvious trend line. You can see it works for a couple of days, encouraging people in, then comes down very, very quickly. It then hits. Now it became basically clear that this was working on the minor angles more than the major ones. 72 is a minor angle, which gave you that low. If you halve it, you get 36. Can you see that it gave you the next low? It stops on 52, which is a minor angle. It stops on 44, which is a minor angle. And so for the future, I wouldn't normally put the minor angles on, but I have in this particular case. You can see that I've got 32, which is major, 28, which is major, and 24, but I've also put on 30 and 26, which are the numbers between those two. I also said that I would be watching these percentages from this high, because even though I'm only a short-term trader, it doesn't mean I haven't got clients who do. I'm a long-term trader. It doesn't mean I've got clients who do it shorter term. So you can do Gann to any degree you want. It's just that the closer you look, the harder it gets, basically. And I also put on this percentage for the future. So let's see what happens into the future with those lines on, and see if they had any effect on the market. So the market comes down, goes through the 36. Now that's a trend line. Can you see that it worked back here? So I would never trade it the second time. Okay, just like here, it works here, but I would never trade it the second time. It didn't last, came down. Same thing here, goes up for a day. Yeah, anybody, what everyone knows isn't worth knowing. Never trade trend lines. That doesn't mean there aren't exceptions to the rule, but the vast majority of the cases you'll end up losing money. So this was quite interesting to me, 32 and the percentage, but it didn't quite get there, and then the market came down to it, and let's see what happens. The market goes up again, goes shooting up. So I put that angle on before it ever got there, and I said I was interested in this, but here it didn't reach an angle, so it wasn't time for it to actually move. But again, I'm looking for big movements, and I didn't think it was going to last. And the market keeps going up. It goes up again, so it's now 1, 2, 3, 4 days. If I was long of this, which I didn't, my stop loss would go below the inside day. We've then created an inside day here, so I'd move my stop loss below that inside day, and then I'd be stop lossed out there. Was it the right thing to do? If I would have done it, of course. And you can see that the market collapses. Now it goes straight through the 30, so I might as well just take it off now and cut that line for the future. And what have we fallen down to? A percentage number that I talked about before the market ever got there. Pretty amazing if you think about it. What did it do? Well, we've reached an angle, 28. It's also reached that, so I probably expect some kind of bounce at this level, and the market did stop at that level. Then it goes up the next day, goes up the next day, but again, I didn't think it was a major movement. What tends to happen with this at the moment is it's working, as I already mentioned, it works on the minor numbers. Now there are more percentages numbers to go below that one, but then we have the big fall and we get to the 26 and the market goes up, and then we have an inside day, and then we break to the upside and inside day. That's a strong sign. You've got lots of inside days, and then you break out of the inside days to the upside. If it would have broken to the downside, that would have been a very bearish sign. And what happens? The market goes up, and as of today it looks like that. Let's get rid of that because that's not my current signal. So remember, I put those lines on, I mentioned those angles before the market ever got there, and this is where the market stopped. Okay, quite incredible. So I hope you enjoyed it. I think what I've just shown you is incredible. I don't think anybody comes anywhere close to what I'm doing, but don't get me wrong, this does not mean this is easy. Trading markets that trade sideways is incredibly, unbelievably hard. And all I've really said over all that period of time is I wanted to short it here, and I was looking for a short here. Okay, I said it might bounce here, and I said it might bounce on that one there, which it did here. Okay, so through all that period of time I've managed to not do loads of little trades all over the place and just do it at the right time. So like I said, hope you enjoyed it. If you'd like more information, then I'll leave the details at the end.